It's John Hardy here on FX. A pretty important morning, a lot going on. We've seen recently some pretty bad risk wobbles across emerging markets. Signs of some nervousness in credit spreads, a lot of attention on junk bonds and a sell-off there. But they're starting to see it spread a little bit into FX and into global markets in terms of equity markets as well. And this is seeing, what is it seeing? It's seeing euro up especially, but also the yen starting to creep up as well. And mostly under pressure. The dollar not so much. If you look, of course, at euro dollar and dollar yen, it appears so. But that's really been more about euro strength and yen strength, and it's the smaller currencies that are under considerable pressure. Signs of the expansion of volatility, especially in things like Aussie yen overnight after a weak wage index figure, and these quite extreme reactions to bad news in Sweden and Norway. Actually, there wasn't bad news in Norway. There was a very slight beat on the GDP, but I think the themes here, bad for the smaller currencies. And it wasn't just about a negative, in Sweden, about a negative CPI number there. CPI coming in far lower than expected. There's as well the financial regulator is asking for more amortization on Swedish mortgages, and this is going to feed into potentially weaker housing prices, and there's a tremendously leveraged private debt sector in Sweden. So big themes there as Eurostocky and Euronocky are to massive new highs, and there's some last sort of shreds of range left if you look back over the ranges of the last couple of years, but we're getting close to 10 in Eurostocky, and 975 or so is the last major level in Euronocky. Eurodollar, the huge reversal to me with this very rapid move. Once we sort of cross the 117 area in Eurodollar, the really sharp and brutal rally in all euro pairs, but just almost no turning back, and we shot all the way to 118. To me, this sort of defines or definitively ends the Eurodollar downtrend. We're also looking at 113 and dollar yen for further confirmation that it's not just a euro story, but a bit of a weaker dollar story within G3. I think the yen is going to really pick up the pace. This sort of full reversal of the prior sell-off wave, to me, points much higher. There's supposedly a Fibonacci for something like 118.85, but I think this sets the tone for a test of the 120 area again, and possibly beyond. We may get bottled up in the range today ahead of the U.S. data, but I think if we still continue to see a bit of risk off, and actually the action could switch a bit more to yen, but still the euro dollar firmly looking higher. In terms of today's calendar, I also wanted to point out, I mean, it's not just, of course, the dollar and euro dollar, it's also a theme of these smaller currencies weakening, and that weak wage growth number out of Australia overnight, seeing an acceleration in the euro-Aussie rally, which is getting some pretty impressive levels. 160 is a big one coming up after that. Aussie yen going below its 200-day moving average. On the calendar today, we have some UK data. Interesting to see cable sort of surviving within the range, so maybe a relative battle there. And we'll watch euro sterling reactivity as well. And then it's onto the U.S. data, CPI and retail sales. I would say if we're going to miss here, especially on the CPI, even an inline CPI, it's not going to stop the dollar from weakening further in dollar yen and euro dollar if risk appetite isn't rebounding. And then tonight we have the further Australian vulnerability potential if the employment data, which has been quite strong, does not come in strong overnight. That's it for me, so I'll pass the baton on to Althea, who's got some comments on fixed income.
Good morning from the fixed income team. Yesterday, European core bonds closed slightly higher amid weak CPI data. It seems that volatility remains limited, even though the constitutional crisis in Spain is not yet resolved and elections are approaching. However, as long as the European market is supported by the ECB, we don't expect much volatility, and what actually keeps us up at night is the emerging markets. As we mentioned in previous calls, we start to see a widespread weakness among the emerging markets due to a strong dollar and a potential interest rates hike by the Fed by year-end. Venezuela was declared defaulted by Standard & Poor's this week after the country had missed 2 coupons payments. South Africa is getting ready for a rating downgrade, as this would mean that borrowing costs will get higher, which may provoke additional weakness to the economy. If this was not enough, this morning we woke up with news that military seized power in Zimbabwe, and this event might prove destabilizing for the region. We remain negative on the sub-Saharan region as we believe that countries will not be able to meet their obligations as the economy deteriorates. On another note, this week's bond update is going to be about the Saudi crackdown. In the article that is going to be published on tradingfloor.com, we will look at the Saudi bond market and those of neighboring countries, and we found out that bonds are considerably weaker. The worst performer is Lebanon, where bond yields spiked by 2 points, hitting 9% last Friday, after news that Lebanese Prime Minister Saad Hariri resigned from the city of Riyadh in Saudi Arabia. We believe that actions of the Saudi Crown King might prove positive for the region as order is reestablished, and we think that this may represent a buy opportunity for bond investors. This doesn't apply to Lebanon, as issues run much deeper than the resignation of the Prime Minister. And now I pass it to Yasser.
Thank you, Althea. Just to round up, risk is wobbling, equity and junk bonds are down. Euro-dollar is reversing its the dollar strength, so we're seeing euro-dollar higher, breaking some decent technical levels. We're watching the CPI today from the US. If this comes out in line or weaker, then we expect that the euro-dollar continues to rally, and also dollar-yen could continue its move below the 113 area. Also, other currencies that are getting weaker, Aussie dollar on weak wage growth. So very interesting days ahead of us. Have a very nice day and bye-bye.